Welcome back. You're watching us here on Halftime Report. This is our special segment, Fund Race, the PE Corner on our show. And today we have with us Sridhar Sankararaman, who's the Managing Director at multiple Alternate Asset Management. Of course, they have about USD $3 billion in AUM with about $200 million to deploy in the consumer and consumer tech space itself. Sridhar, always a pleasure speaking with you, this time more so because it's in our studio. The obvious question is, you have $200 million to deploy. What is the environment looking like, especially when it comes to valuations, the parameters you all are tracking, and where is the opportunity?
So, so Mangalam, we look at opportunities in about 3 or 4 buckets, right? So we look at assets which have a leadership position or an ability to become a leader in a large market, because we always know that leaders get a different premium over the second or the third player, right? We like businesses which have a high gross margin pool, companies which have an ability to expand to the adjacencies, and businesses which have demonstrated customer love. I mean, compounding revenue is one, but compounding love is what creates long-term winners, right? I'll just give you examples. We were investors in PVR. Ajay Bijli made sure that people paid 2x the premium to watch the same content because of the experience that he created. We were investors in Delhivery, right? I mean, Sahil always priced himself premium to that of an e-com express because people wanted to pay for that because there was consistent supply. We are investors in Licious. It's much more expensive meat compared to the fresh market, right? Because people are happy to pay the premium. That is customer love. And in our experience of investing in consumer, we have seen that founders who are able to compound consumer love are the ones who create the long-term value.
So which are the founders right now where you see love being created? Because love is great. You just rearrange the words and put an A out there, it turns to value. That's
Correct.
What matters in the stock market. So tell us more.
That's true. So, see, if you just look at the Indian consumer, right? I mean, all of us in the room, right? We care for 3 things. The 3 C's. We care for cost, we care for convenience, and we care for catalog. So, Indian consumer, therefore, is demanding, aspirational, and value conscious. So, we want the best of everything, but we want it at a price, right? And therefore, there's an Indianization to what type of businesses will really succeed in this country, right? Also, we have a misnomer, Mangalam, right? We keep saying we are a billion people, but we are not. We are 80 to 100 million small tribes because our taste, preferences, everything changes, right? And which is why we have so many regional brands. So brands that have been able to overcome these 2 are the ones who are able to command a certain value because it's so hard to create a consumer brand in this country. And that's why markets value them the way they do, because there's a huge terminal value. Because brands in this country, once they're built, don't die, right? So that explains the high valuation that we have. But I believe, Mangalam, that there is an arbitrage in the private market versus the public market. Private market, you're still able to get some of these brands at, I would not call it reasonable, but I would just call it, in terms of closer to the fair value. Then, and then the whole game in the last 10 years, if you look at private equity invested brands, the value creation has happened less from growth, more from multiple expansion. So invest in these companies, look at 300, 400 crore brands, take them to 1,000 crores, and then look to list. Has been the game which has been created value. So I would say in private market, there is still opportunities.
All right. Hi, Sridhar. Good to have you in the studio. A quick couple of questions. Before both you guys bond on the consumption theme, wanted to ask you about PVR, since you mentioned, just to clarify, have you all totally exited?
Yes, we have.
Totally exited. Arvind?
Exited.
IEX?
Exited.
RBL Bank?
Exited.
All right.
So all the listed spaces are exited, right?
So that's out of the way. Since we're talking about primary and secondary market, what's the view on Zomato versus the Swiggy argument? Tell us about the space, without getting very, very specific.
Sure. See, one of the big trends that we are seeing is brands in India that are solving an India-specific problem will definitely create value. And not necessarily brands which are a cut, copy, paste of what has worked in China or what's worked in the US. I'll give you an example, right? A lot of buzz on social commerce 3 years ago. Right? That's not worked in India so much because we are not a tipping culture. Right? It's very difficult to replicate something which has worked somewhere and say, hey, this is going to only work in India. So quick commerce has not worked in many places in the world.
Right.
So why does it work in India? It works in India because of 3 reasons. One is the rider cost is very reasonable because the cost of human labor in India is much more. The density of people is very, very high, right? And third, people value anything which I said goes to 3 C's, cost, convenience, and catalog, which is what quick commerce is able to offer you, right? So quick commerce is a very India-specific phenomenon as much as a global phenomenon, right? I think the big what has really worked for Zomato or Blinkit is the average order value.
Right.
The average order value is you have to make money on every order. If your average order value is what it is for Blinkit, it's close to $600, your fixed cost is the same. The cost of the rider is the same. Right? You are still able to make money off that, right? So I think whoever is able to crack a higher AOV or higher average order value will be able to create value over a longer period of time.
That will be a function of the assortment itself,
Absolutely.
right? As the assortment itself
the fact
is
that people are selling
broadening.
iPhones on q-commerce tells you the kind of AOVs that one can aspire for. I mean, who would have thought that one would buy an electronic item?
But totally, but what is the future for Q-com in India? I mean, you have Blinkit, which is expanding extremely fast. You have Zepto, which is raising money extremely fast and at higher valuations as well. Then you have all the others as well, looking at, either improving their assortment, growing. So where does it go? Is it a monopoly with small players? Is it a duopoly? Is it one large player with many regional players? How does this space pan out? What does a mature Q-com market in India look like?
So the way all these three players began is regional. Zepto was very strong in Mumbai. Blinkit was very strong in Delhi and maybe Calcutta. Swiggy was very strong in Bangalore. Right? That's how they initially began, and then they entered each other's markets, right? Even within pin codes, you'll see that Mangalam, in your area, maybe one player might be a lot more popular than the other. In my building, one player is more popular, depending on who's got the darker store closer to where you are, right? It's ultimately about speed and ultimately about assortment in that area, right? If a particular area belongs to one particular community, if you're able to, so it's a very, it is still a micro market game in that sense, even though in the bigger sense, it's almost like merchandising in a kirana.
Got it.
Quick commerce is a glorified kirana, right? For the lack of a better word, right? And you have to merchandise in every locality. You cannot sell what you sell in Matunga to what you're really selling in Malabar Hills. I believe quick commerce today is, if the Indian retail basket is 1 trillion, quick commerce is still a very small fraction. 10 years from now, I believe it could be a very, very large opportunity.
So there's still value is what the short point is. Nigel?
Okay, all right, Sridhar, we'll have to thank you on that note. Appreciate you coming down and detailing all your thoughts. We look forward to chatting up with you more often as well. Thanks
Thank you. Cheers.
Thank you.
Well, time to slip in a short break. You come back, we'll get you excerpts from a conversation we had with the management of Triveni Engineering in the commodity segment. Stay with us.